All right, good evening, everyone. At the moment, it is Wednesday, July 19th at approximately 7:26 Eastern Standard Time. So what I wanted to do was, check in with you at the middle of the week, since we've had a few trading days go by, and the market has been, pretty BAU, business as usual, for the last couple of days. We did have some news today that had a small effect, or what have you. But for the most part, we still have some opportunities in a few pairs. But we're just going to, again, continuing with the back to basics, understanding the market structure series. So this time, what I'm going to do is I'll let you see. I'm going to show you a couple of entry strategies or processes that I was able to use so far this week to have some successful trades. I did lose one trade. The risk to reward was pretty good, so didn't lose much on the trade, and it was a matter of getting in the move just a little bit too early, not having all of my confirmations and checking all of my boxes. But once I did have those confirmations and checked all my boxes, I was able to get back in the move at the appropriate time and actually get a pretty good win out of it. That was actually one of the two trades that I took today, which I will show you. All right, with that said, let me go ahead and share my screen. All right, so as we can see here, we see we want to again look at the market structure. So what I'm gonna do is I'm gonna hide that, and we're just gonna look at what we have here. So we can see that we have some structure that pretty much formed here. So I'm gonna zoom out just a little bit so that you can see. So we see where the market making higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, higher low, and then higher high. Then, as we know, the market put in a lower low. This was an indication of a shift in the trend, the buy or bullish trend, in the pattern, a break in the pattern. So we know that when we start to see breaks in the pattern, that can indicate a shift in direction, right? So let's look at what happened. So we had this lower low that was put in right here from the higher high. And we came in and we put in a lower high. So we did not create a higher high. So again, another piece to the puzzle that tells us that there's a strong possibility that price at this time is looking to shift gears and move to the downside. So in any case, let's zoom in just a little bit because I want to show you the actual trade setup that I ended up getting into. All right, so we can see where, again, the market may put in the higher high here, then we put in the lower low. Now, once I saw this lower low get put in, so again, we had the higher high, I saw the lower low get put in. Of course, what we're looking for now, if the market put in the lower low and we're looking for a market shift, of course, we're going to look for the lower high. But me understanding, the market structure, so realizing that when this lower low was put in, I started seeing that the market was kind of struggling, to get up here. So we had some of this going on right here. And then, we had some movement in between here. So some of this in between structure. So what I ended up doing, realizing that the market wasn't going to break this low just yet, and I had an opportunity to get in, I ended up getting in the market on this candle right here. So I did that on the 3-minute time frame. Let's see. So first before we do this, I want to see 9:15. So we go to the 3-minute. We want to take a look and see what that looked like at that time period. All right, around that time frame. So let's see. I want you to see what I was seeing around that time frame. All right, you see it right here. All right, you see it right here. This was the roughly the 9:15 candle, and of course, this order block had not been created just yet. I was going purely off of market structure. So when I see again, my 15-minute chart is my analysis. That's where I'm doing my technical analysis for UJ. Of course, I do my top-down analysis going from the daily chart, the 4-hour chart, the 1-hour chart, 15-minute chart for technical analysis for day trading, and looking for opportunities on the 15-minute chart, and then the 3-minute chart for my entries. Again, this is relative. Some would say, if you're going to analyze on the if you're going to analyze on the 3-minute, on the 15, then maybe you should go to the 1 minute. But I felt like it was just a bit too much noise on the 1 minute for me. So I felt like the 3-minute for UJ anyway, because different instruments, require different time frames and entry strategies and stuff like that. But for me, for UJ, the 3-minute chart seems to be a good correlation for entries based off of my 15-minute chart technical analysis. So anyway, again, we see that the order block just disappeared. But in any case, so this is what I was seeing. So again, I came down to the 3-minute chart to start looking for my entries. And this is actually what I saw. Of course, you didn't see this on the 15-minute chart, but I was able to see this on the 3-minute chart. So when I saw this, I saw, we saw this is the same lower low that was put in that we saw on the 15-minute chart, right? Then it went in and put in a lower high. Once it put this lower high in, I was able to then, I wasn't looking to get in just yet. Of course, we want to wait, to see what the market is going to do. Because technically, looking at the strategy and the process that we've been talking about, right? If we go with the downtrend, if we're looking for the market to continue a downtrend, right, we would look for a lower high to actually put in a lower low. But like I've been explaining, that doesn't always happen. So you have to pay attention to what's going on. So let's say, for instance, the market does not put in a lower low, which it did not put in a lower low here. It actually put in a higher low. When it came down and put in a higher low, this was my entry. I said, okay, the market isn't looking to put a lower low here. We got this pretty good wick rejection right here. So I was bullish in the market at that time. So I went on once this candle closed. I ended up getting in actually on the 9:18 candle. Well, right after this candle closed, I got in, and I'll show you. Of course, I had some drawdown, but my stop loss was right here because again. Looking for tight stop losses. And my thing is if price comes and violates what I consider, again, because the higher low label wasn't here at the time. Again, I just saw the candle rejection and saw that, again, my thinking at the time was that the market isn't looking to create a new low at this time. So I already knew that this was a higher low, even though it wasn't labeled, again, because the market didn't come down and create a new lower low. So I figured at this time that the market still had some bullish movement to do. So anyway, so I put my stop loss right below this swing point right here. Again, allowing the market, allowing some room for price to come back, and gather some liquidity before actually moving up. And that's exactly what happened. My stop loss was pretty tight. Of course, whenever you see this, if you're looking at it, you get a little nervous and a little anxious. But again, if you're doing this, by a process and some mechanics or what have you, a lot of times you can find yourself on the right side of things. And so market came back, got some liquidity, and I'll show you what ended up happening. So as I said, I got in right after this candle closed. So it was roughly about right here. And I actually wrote it all the way up. So my target was to target this high right here. And so that's exactly what I did. I targeted the high and was able to come out of this one with almost a 50 pip move right here, right there. So I followed it all the way up. And what I ended up doing was basically trailing my stop loss. So once so I got here once price came back here and then made its move up to here, created another high, I moved my stop loss to here. Then, of course, price comes back. And, once it got here, I was already out because I had to take profit targeting these highs right here. So not a bad movement. And that was pretty much the strategy that I utilized to get into the market. Now, one thing to be careful of, right? Remember, I said that the 3-minute, the lower time frame, 3-minute, 1-minute, 5-minute, typically individuals utilize for their entries. I would say be careful of utilizing such small time frames for your analysis. Now, you analyze these smaller time frames for the price action that's going on at the time, yes. But for your overall analysis, you should be using the higher time frames, and that's what you're basing your trades off of, your entries and your exits off of, basically. Or what have you, because it's just too much noise on the lower time frames for us to really kind of base our technical analysis off of, right? The higher time frames and even the 15-minute, is a lot noisier than the 1 hour to 4 hour and the daily and what have you. But it seems to be working for me so far. But again, key things to remember when looking for entries. When you see stuff like this where the market put in that lower low, of course, we're looking for it to put in a lower high, which it actually did. And again, this was the trade that I was in that I just showed you all, where it went and created that lower high. Again, wasn't the market, wasn't looking to create a higher high at this time. Obviously this market shift right here was big enough to where, again, the market makers weren't looking to push this market up. This move grabbed some liquidity, and then we were able to go ahead and get a little move or what have you out of it. So we want to ensure that when we're looking at our entries, that keeping in mind that it's not going to always look textbook. So again, you want to make sure when you're looking at your technical chart, whether that be the 15-minute, the 1 hour, or whatever the case may be, again, utilizing this particular strategy or process, that you understand that, again, we have a lower high here. So the expectation would be that price is now going to put in a lower low, but it doesn't always work out that way. So if price doesn't do what you expect it to do and the move is invalidated, just wait for the next setup. So again, this came down, it did not create a lower low, it ended up creating a higher low. So that could mean a market shift or what have you, but that doesn't always mean that. Again, price is going to do what it wants to do and not what we expect it to do. So again, you wait for, all right, since we know that price isn't looking to put in a lower low right now, that it's gonna, again, the thought process will be then, let's see what it does. We know that it didn't create a higher high, so we may not go from higher low to higher high this time around. So let's see what price does. Again, you want to wait for the next setup. So as we can see, price goes up, it ends up creating a lower high, right? Again, no setup there. So a lower high, we would look for price now, because again, the down move seems to be the dominant direction at the moment, right? So you can then possibly look for when price fails to create a higher high or anything like that, you could possibly look for a bearish trade setup, some sales going on. At this point. So that's a possibility. You could get in on a move like this and collect a couple of pips. Or you can wait, for a reset up. So you can see this lower high, put in this lower low, which would be expected. Then again, the expectation, if we go on with the current trend direction, this lower low puts in a lower high, which then we will look, for a lower low, but we see that put in a higher low right here, which again could be indicative of the timing, the transition of the markets at the time being. So again, the setups, if it breaks the pattern, then that makes the setup invalid. That's what I really want to get across to you, that if it breaks the pattern, the setup becomes invalid, and all you do is just wait for the next valid setup, right? So if we saw this lower high put in, we saw that price wasn't looking to break this this last lower high and put in a higher high, then the thought process would be that we'll come from here and we'll put in a lower low. And you know, you would have been wrong on the lower low part, but you wouldn't have been wrong on the direction of price, right? So this one went in and put in a almost a 20 pip move for that particular one. So you would at least gain 20 pips, you know, out of that move. Again, and then, you know, just, you know, wait for the process to either continue lower high, lower low, lower high, lower low, or, you know, just see what the market gives you. If it created a higher high with this move right here, then what you would do is you will wait for the setup to validate, and you will wait for it to put in a higher low. Then once it put in that higher low, you will look for opportunities to get in the market on a buy trade to catch the higher high move, right? That's what it's all about. Again, if price doesn't do what you expect it to do, then wait for the next setup and the next opportunity for it to do just that. And that is all I have for you all today. As always, I wish everybody lots and lots of great trading. And hopefully you all are understanding of the concepts and things that I've shared with you in this video and the last couple of videos as well. So good luck to you all.